The founder of one of the world's biggest cryptocurrency exchanges has been charged with defrauding investors out of $1.8 billion. So who is Sam Bankman-Fried and what went wrong? Sam Bankman-Fried, universally known as SBF, is perhaps the highest profile boss in crypto. His exchange, FTX, allowed investors, around 1 million of them at the time it collapsed, to trade real money, dollars, pounds, whatever it may be, for cryptocurrencies, which were then traded and exchanged on the platform. At the same time, he was running another business, Alameda Research, which was a crypto hedge fund taking high-risk bets using money that should have been separate from FTX's customer money. Now, this business grew really fast, thanks not least to celebrity endorsements. He paid a great deal of money to get the likes of Giselle and the US football legend Tom Brady to endorse the platform. Larry David, the comedian. They brought glamour, and he got gravitas from inviting former presidents and prime ministers. Bill Clinton and Tony Blair famously shared a platform with him at a glitzy conference in the Bahamas. He was lobbying in Washington, not just lobbying, but throwing money at lawmakers. A huge amount of political donations coming from FTX's apparent fortunes that put his personal wealth at one point valued at more than $20 billion. But a few weeks ago, things went badly wrong. There were questions about where Alameda Research was getting its money. The value of FTX's own native coin, FTT, started to crumble and fall, and with those questions, investors tried to withdraw their funds. There was a run on FTX as people scrambled to withdraw billions of dollars. They couldn't get their hands on the money because it lacked the liquidity, and the exchange was frozen. There's an estimate of between $8 and $10 billion of customer money locked into that platform, and now the authorities, the Securities and Exchange Commission, and federal prosecutors are alleging that in fact what was happening was SBF was taking customer money, that's the money ordinary investors like you and I would have put in, and shoveling it through a back door into his hedge fund business. You can't do that and not expect to face investigation by the authorities. And they say this might be a brand new kind of trading, a brand new digital currency, but it's a very old form of financial crime, fraud.
Small group of grossly inexperienced and unsophisticated individuals who failed to implement virtually any of the systems or controls that are necessary for a company entrusted with other people's money or assets.
Question for small investors who've been in crypto for the last year or two is whether they'll recover the losses. If you've got your money in FTX, that is a very moot point. But we've seen Bitcoin, the value of the most established and largest cryptocurrency, plunge from over $60,000 to a little over $16,000 this year. Those who believe will say it's just a dip in the roller coaster of crypto and it will come back. There are plenty who wonder if smaller investors will ever see their money again.